Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 25th of January. There was no Bulletin Board Heroes yesterday because I think with the FTSE down nearly 200 points, it seemed a bit rude to have one. But there was one on Sunday, and in that one there was Amur Minerals, which actually at that time had just, versus Friday's close, just broken that resistance line there from back in August, so closing near the 2 pence level. Capped up on Monday against a horrific market, and obviously we had the big push today. A couple of levels left at the moment just of interest. One is that resistance line there from back in March at around the 3.8 pence level, and the next one is that steeper line from June heading up to 5 pence. So the message with that really is an end-of-day close above 3.8 could give Amur the chance of heading up to 5 pence over the near term, i.e. the next couple of weeks, something like that. But at least for those who think the charting doesn't work, we have an example of where it does work. Moving along to ADV, which has obviously not been, it was almost the opposite of Amur Minerals, complete wipeout in terms of the chart there. I suppose the insulting part here was that the shares didn't quite hit the top of that channel, which was heading up to 6 pence before they collapsed. I suppose the channel could have been like that, might have been more accurately drawn like that, because actually that's what the shares backed off from, that April resistance line. Current position is that we are looking at, for those who feel like some high impact bottom fishing, we are looking at yesterday's high, which is around 27.5. An end of day close above that could give the shares a chance of heading towards the 0.4 area, 0.45, which is the top of the gap. But obviously that's only for people who like sort of very, very high risk indeed. The other point to note, I suppose, which is interesting, is that even after all the losses that we've had for the share price, the RSI hasn't actually gone below where it was back in April, which is around 17. So that sort of gives a slight impression that we could have yet further to go on the downside. Even though you can see that people have been trying to buy this dip from 0.6, 0.7, etc. But just a situation where it's interesting that we do have that divergence between the last two major lows on the advanced energy chart. Something not quite so problematic, we hope, is Eco Atlantic, which has had many false dawns in the past, but this is interesting in the sense that the start of the rally here came off an unfilled gap to the upside, which is what we saw just a minute or two ago at Amur. So that gap there was the sign that the shares could be on their way higher. In fact, it was a bear trap gap reversal from below the initial December low at 17.2 pence. Current situation is that we were in what I would describe as a V-shaped bull flag. So we had the initial surge and then V rebound. The fact that it's off the 200-day moving average at 24 pence is all the more positive, and that suggests that while we're above the 200-day line on an end-of-day close basis, we could see the shares head up towards the top of that broadening triangle from back in January last year, heading up to 36 pence maybe by the end of next month. Obviously, if you're cautious, you could just wait for an end-of-day close above the initial January peak at 28 pence. The other point to know, which is another positive, in fact, is the way that both the 50 and 200-day moving averages are rising. That suggests that we're heading into a golden cross, and the run-up to a golden cross, maybe in a couple of weeks' time, is traditionally the strongest part of the cycle. So we've got plenty of bullish points there. And the final one, actually, is the bullish divergence line there. So that the bear trap low with a lower low there at the end of December had a higher RSI, so that was also flagging that we could have a turnaround here. But the magnitude of the rise is now what's key, and it looks like 36 pence could be the minimum on the upside while we hold above 24. Moving along to another stock which seems to be quite sprightly at the moment, Europa Oil and Gas. And in fact, the chart not a million miles away from the previous one. Eco, here we've had two gaps to the upside in the last month, or this month. That's a very positive setup. We've also got, I think, the shares going into a golden cross as well, and that V-shaped bull flag type of situation. In fact, it's a floating V-shaped bull flag above that last gap to the upside, which has been held well. triple tested. So that does suggest that we're looking for not only the 2 pence area, which is that March resistance line, but also up to a late June resistance line projection as high as 2.8 pence, perhaps over the next 6 to 8 weeks, something like that. But that looks pretty sturdy as a setup there. I suppose the other thing that one could draw is that resistance line there broken like that, or even another one broken as, breaking rather at the moment like that. So plenty going on there at Europa, so that looks pretty strong too. Another stock which is looks like it's rehabilitating itself is Global Petroleum, and I know this is a stock followed by a lot of people, and we've got this sort of rectangle that the shares have been in since August. This looks like it will finally break, and that's set on the basis of, again, another V-shaped bull flag bouncing off the 50 and 200-day moving averages. A similar setup to stocks we've seen so far today. Clearly, one could just wait for a break or an end-of-day close about 0.7 pence, and on that basis, then the target would be up to that resistance line there from back in March. If I can extend it up towards the, still doesn't want to extend, up towards the 1.3 pence area. That has been, should guide the shares higher over the next month or so on any end of day or weekly close above 0.7. So guessing here that Global will finally break through 0.7 with that setup that we've got at the moment. Another stock which is livening up at the moment, and thank God there are some stocks doing this after yesterday's horrors. We've got Katoro, which after having another final, I say, narrow bear trap rebound off the lows, key reversal to the upside, and I suppose all we're missing now really is an end-of-day close above 0.67 and the 50-day moving average to take the shares possibly up to 1.4 pence. Punchy call, but it seems to be that we could have that in place for Katoro. As I said, basically the 50-day moving average, probably the trigger point there for a potential move to the upside to 1 pence plus on that particular situation. Moving along to Petro, and here very interesting setup in the sense that we've had that extended base for the shares, final bear trap in December, neckline support, neckline resistance was at 3.36, that's now become support after yesterday's testing that almost exactly yesterday, and also bouncing off the neutral 50-day moving average. That suggests that we should at least get a retest of this month's initial resistance at 4.9 pence, and then after that possibly much more, on the basis that this is actually a cup and handle formation. That could deliver, I suppose, a target as high as initially as high as 5.5 pence. So a pretty good level of confidence in this particular situation that we've got here, especially if that rising trend channel from November is as it looks at the moment. So pretty impressive stuff there. Onto a stock which I think had some news today, which I've already forgotten what it is because it was very early in the morning. But here we've got Mycelx, which has had this sort of sideways shuffle on the daily chart since the beginning of November. Current situation is that we're in a rising trend channel from back at the beginning of last year, heading up towards £1.30, above the recent support at 66 pence. We're looking to that level maybe by the end of March, something like that, and hopefully much sooner, given that we've already had quite a lot of sideways consolidation, which has been either at or above the old May resistance. So looking good there. Stock which I'm always rather wary of, just because I fear that they might come up with a cash call, is Pantheon Resources. But here we have a situation where it looks as though the shares are just ready to break that resistance line there from November. I suppose 76 or 78 pence, or the 80 pence level really would be the level to break. So end of day close above 80 could take the shares up to £1.20, cash calls permitting, over the next 1 to 2 months. And it looks as though the support there is pretty well embedded at the upper 60s, and that's been the case since the beginning of last month. A couple of shares to go now. One is looks rather improbable, but seems to be real. Prophotonix rather. Here we've got a situation, we've got a rising trend channel which has been in place since the end of 2020. Great support here above old resistance, so let's call that the 7.8 pence area, something like that. And above 7.8, looking for 12 to 13 pence over the next 1 month or so, and possibly much more, given the way that we've got this sideways consolidation. Sideways consolidation is the strongest you can have, because obviously the sellers are just not getting any traction whatsoever. Onto a more normal chart to finish off with, U group. Here we've had a gap, unfilled gap to the upside through the main neckline resistance around the 290 area, and above £2.90, well, I suppose at least above the floor of the gap at £2.80 rather, looking for a target which is a May resistance line projection as high as £4.50 over the next 1 to 2 months. So maybe a situation worth following. The good thing here is that there's been many months of consolidation in that £2 to £3 range, so it looks like we're finally ready to break out. But obviously anything below 280 means that this is a bull trap, so something to watch out for. That's it from me today. More updates tomorrow.